Good evening, ladies and gentlemen. Today is the 8th of March, and we entered the day, this being a Monday. Generally, you don't see too much decay happening, but considering that the expiry is happening on Wednesday, today posed itself quite a good opportunity to capture some intraday decay. We were expecting a lot of volatility and randomness in the market, and eventually the market didn't disappoint. For the longest time, we seemed to be in a smooth downtrend, but at the same time hovering plus minus 15,000. Given the positions that have been built up around 15,000. The idea for today's trade was that since US markets ended with immense positivity on Friday, and even though they did dip slightly today, there wouldn't be any big moves in our market prior to seeing what happens in the US tonight. Generally, our market isn't one to always follow the US market, but lately that has been the trend, so that is what we follow. That being said, we closed today positive by about 1.5% for the day. It could have been a lot better, but the last moment, a 100 plus point move in 10 minutes really took us off guard. Regardless, we ended positive for the day, and then it in itself is a big win. So I hope you have some takeaways from this video. And if anything, it should be about how when the expected volatility is high, you spread out your risk reward. And have a great evening. Thank you for watching.
Good morning, ladies and gentlemen. The time is 9:23 and we've opened almost exactly at 15,000 and are hovering slightly above. Today's global cues seem to be mixed to a certain extent. So we had a very good Friday in US markets, but that followed off with this morning once again bond yields being up, heading towards the 10-year, heading towards 1.6, and US futures slightly in the negative. Lots of volatility. We saw big gap ups in Asian markets, and which got sold into and now trading 0.5% down. We're also expecting a considerable amount of volatility, which is why we've kept a very large range, 950 points on our Straddle, because option premiums are really good, and you can keep a 950 point Straddle and still capture about 40 to 43 points on it, which is great. And also bought hedges which are much closer, 500 points and 400 points away, because in case there's a rapid volatility and there's an increase in IV, these hedges will do quite well. So what is our trade plan for today? The trade plan for today is that we're going to hold this range, an upper range of 15 to 70 and a lower range of what was previous close of 14 880 890, that about. So in this range we should see a good amount of decay. We will not adjust very easily, so we will not adjust below 15,100 and we will not adjust above 14,900. So in that 200 point range we're not going to make any adjustments. It's going to be a waste of time if we see the kind of moves that we have been on the past few days. So that being said, we'll keep you posted. And the interesting thing now is these options are expiring on 10th, which is a Wednesday, which is just 2 days away, and you're getting 40 to 43 points on a Straddle, which is 950 points from the spot. Okay, 10 o'clock update is that the range is looking really good. Despite the up move, we're not seeing much of an expansion in the calls, and we're seeing the puts decay quite a bit. Now we'll wait for a break above 15,100 and to hold there for about 15 minutes to then move up our puts by 50 points. So until then we will not be doing anything else. We'll just hold on to this position. The thing is, this call is currently 350 points out of the money, which is why it's really not expanding despite the up move. Okay, the time is 10:19. Also I've set up this here, so you can see the time is 10:19 within Firefox to capture the time. And yeah, currently we moved up, we tested 15,100 and then we're coming back down from there. Seems to be quite a sideways setup. Reliance is quite strong. Bank Nifty also saw a good amount of short covering. Taking a look at Bank Nifty monthly options, a lot of put writing took place at 35,000, a lot of short straddle positions at 35,500, and for this they're getting I think about 1,800 points, possibly 1,800 1,900 points. I'll check, but so the range looks strong. And meanwhile, currently 35,500 sees a good amount of short straddle positions. Bank Nifty now, after getting short covered quite a bit, almost heading above 35,850, is now pulling back slightly. That being said, we have not had to make a single change since morning because we've kept our range super wide and taking advantage of the fact that premiums were so extremely high and continue to remain high even though these options have to expire on Wednesday. Meanwhile, this is a good time to cover a little bit of the analogy. So the reason we're not expecting an explosive move on the upside is one is the global cues, and two, there aren't that many shorts that are in the money that might see big kind of covering. So that is exactly why we're not expecting some massive short covering move, especially on the Nifty more than the bank Nifty. And the OI data shows very sideways. I mean, this is a very sideways interpretation of what current OI is. At the same time, the reason we're not expecting a big cascade is on Friday when US markets were trading, they moved up big time. They moved up upwards of 2%. Now, until now, let's say futures are slightly in the red or Asian markets are slightly in the red. Whether you like it or not, this market follows the US market. Doesn't always. Right now, it follows the US market. Now they closed with super positivity and joy on Friday. So until US markets open today, and that gives some kind of a clear direction, if at all it does give a clear direction, these markets are not going to go anywhere. But at the same time, because of the kind of randomness that is there, we're easily seeing 100, 150, 200 points move in either direction. And we don't want to be stuck in a position where we're constantly fighting each side and then losing on the side that we were fighting with. So that's why we've kept this kind of a range. And a lot of people will be like, okay, the quantity is quite high, but if you actually think about it, the margin for this position versus the return, we're currently sitting on close to 1.5% return on margin already. Because when there is so much volatility, these super OTM options are worth a lot. I mean, if this was last week at the same point, if we go back and see a 950 point strangle, you'll have to look at Tuesday's data because this is expiring on Wednesday. You would have even got maybe 60% of these premiums. You wouldn't have. The reason we're getting it now is because that's the kind of market we're in. So that being said, the time is 10:25. As you can see, the time is here. So going forward, you can look at this and the time will always be here. So we're seeing this dip below 15,000 now, big sell-off. Reliance not really participating in the sell-off, but this dip towards Friday's close and some sort of support forming there. So the idea will be is if we start breaking down below Friday's close and hold that for 5 to 10 minutes, then we will move down these calls to the 15,400, which looks like something that is likely to happen now. Okay, so we've taken support at Friday's close and we're seeing a pullback from there. But even with a pullback, clearly this sort of looks like a consolidation or sell on rise sort of a market. To balance our credit, we have squared off the 15,450 calls and moved them down to 15,400 anyway. In case we continue to see a slide, then this definitely will help. But essentially, what we're trying to do here is take in more credit onto the position itself. So that being said, the time is here, 10:43. Okay, 11 o'clock update. Basically, the market currently remains both kind of buy on dips market and sell on rally market, depending on what is happening around 15,000. So the OI data signals a lot of sideways action around 15,000, which is exactly what is happening. We're seeing big moves and then that move getting completely negated, pulling us back towards 15,000. Same goes for Bank Nifty towards 35,500 and 35,000. So this being the case, when you see such volatility, you also see immense spike in premiums. So when we see a big dip from 15,000, selling a FAR OTM put is actually a very good trade. It's taking a contra because we're seeing this magnetic pull back towards. These puts expanded all the way till 30 at some point, right? And at that point, we did move down our calls, but our calls are not expanding at all. I mean, too early to speak, but they aren't. And whereas these puts have come down by 30%. And the difference on the spot is probably around 30 points. So, and these puts are, mind you, 500 points away. So, that being the case for now, market remains sideways. One more thing to notice is when we saw dips, you don't see too many participants. If you see that it's just Bank Nifty, IT is not dipping, Reliance is not dipping, then you don't have to be too concerned of such dips. I mean, it's not the fact that we're dipping, it's how we're dipping that tends to be a problem at times, where you see 100 points wiped off in a 5-minute candle. that can feel very dangerous. So that being said, premiums are still very good. In our strangle itself, minus our hedges, there's about 35 points. So we'll continue to hold this. There's a good chance if we continue to hold around 15,000 plus minus 50, the strangle itself should decay to about 30 towards the close of the day, which is a good enough thing. And the thing is, since we're so far away, we're not having to frequently follow the market either. Yeah, time is 11:01 as you can see here. Okay, the time is 12:04, and so the market continues to remain sideways around 15,000, and Bank Nifty between 35,000 and 35,500, and not a lot is happening. We've been quite stagnant for the past hour, and our position is looking really good, and we're quite well balanced. We've captured good amount of points, a little bit more than 10, and we'll continue to hold. And now what we'll do is, towards the end of the day, if we start seeing a trending move, we'll start taking off some of the position. The idea will be to close the day with at least 5 points in the positive, and yeah, that's what we're going to work with. So the real thing here is that with all the positions built up around 15,000, there's no real trigger for an up move or a down move. And looking at US futures and trying to figure out what's going to happen in the US is going to be a pointless act. We saw Friday US futures were negative by 0.5%, and markets ended up S&P 500 by 2% up. So that's exactly why we're not expecting much movement today. Many people would also be like, you could have been closer in, but that's all retrospect. At this point, there is a high chance of there being insane volatility in the market, which is why premiums are so high. And if you don't want to at any point of time take on more risks, it's good to stay away and smoothen out your risk curve, which is exactly what we've done with this trade. So we continue to hold. We'll keep you posted. Time is 12:06. We're just taking some additional credit on the call side now because we're seeing a dip below 15,000, a good 35-point dip. So just to take some more call side credit in the meantime, we're shifting down our calls. Time is 12:45. So our position is doing quite well, all said and done. And what we'll do is, if we start testing below 14,950, and it looks like we're heading towards 14,900, then we will basically just be exiting the position. At that point, we should still be up about 10 points on the position. So that is the idea for now. We're seeing random noise, but we're not moving away from 15,000. There is this magnetism towards 15,000, which is why we continue to hold. But of course, we have to understand our position is for today, and it's going to close today. We're not carrying anything over. So that being the case, we will not push it too much. We're more concerned with what is our risk reward than what is happening towards the expiry. So yeah, we continue to hold now. It is 12:47, and we've balanced our position by moving down our calls. Okay, so 1 o'clock update. Same stuff. We Reliance dipped till 2,200, dipped slightly under and pulled back up. And once again, Nifty dips from 15,000, but feels this magnetic pull back to 15,000. Currently, there's 41 points in this triangle, and our hedge is about 7. So this should continue to decay through the rest of the day, and we'll continue to hold because we're balanced and the view is more or less on point. Okay, so we have broken down below the day's low again. So we're rolling down our calls. Time is 1:41. And currently the 14,500 puts started to expand. We've moved below 14,950, so we've moved down our calls. And the idea will be now, if these puts expand to around 30, then that is the end of the trading day. We'll exit. If these puts expand to 30, these calls should expand below like 20, below 20. So that should be good enough. We'll still be up 10 points and we will close the trade at that point. Once again, dip below 15,000 and then we're heading back. So 15,000, the big thing. Seeing Reliance move below 2,200. The idea is it will not really dip. If you see volumes also, it's just insignificant. It's going to be plus minus 2,200. And Bank Nifty as well will not have too much downside below 35,000. So what is visible is that there is demand for Nifty below 14,950. And as far as our position is concerned, our put is 450 points away and our call is 350 points away. So we continue to get the benefit of premiums being so high and they continue to decay and we continue to hold. There's another 1.5 hour left for market close. If this continues and we don't have a big breakdown or an up move from here, we can still expect another 6-7 points of decay easily. We're also now planning to get out at a higher stop loss, which will be a more mark-to-market stop loss. So if we head down to about 230 from here and we're unable to balance, then we get out of the entire position. Okay, the time is 2:20 and big moves. The complete demand for Nifty below 14,950 and now we are 30 points above 15,000. So obviously these calls started expanding rapidly and we had to move up some of our puts to balance that. We are not seeing too much upside beyond 15,000, but at the same time there were a lot of shorts built up during today's downtrend. We might see some of those get unwound. This call is still 300 points away and put is more than 400 points away. So we're not particularly worried about this call expanding rapidly because obviously the big up move, big green candles, you will see this call expand. That's why we have not matched the premium with the put side because we don't want to take on that much of additional put side risk. Even if we close at 15,050, this call will be cheaper than what it is now easily by 4 or 5 points. So that being the case, this is not exactly the time to take on big put side risk. So this is what we've done. Just our call is trading 50% more expensive, and that is fine because if we see a fall, these will expand rapidly, and that's because fear will always build up faster on the put side. And whereas if we continue to go up, then that will lead to in general premiums coming down due to IB coming down. So there will be a correlation there. No need to rush into doing anything here. We continue to see an up move, then we will potentially start moving our calls away. But that's only if we start heading to around 15,100. We will move the calls up to 15,350 or 15,400 depending on the nature of what is happening. So we'll keep you posted. Time is 2:23. Okay, the time is 2:42 and it looks like we're holding above 15,000 really well, and that just makes it a little bit of an opportunity to take more put side credit. We saw resistance here, we got sold off, but clearly once again there seems to be demand at this point. So why keep a super biased view? We might be wrong. So that being said, we have moved up our puts and now we will have roughly about another less than our 48 minutes to go for market to close. In the meantime, we're just going to hold on to this position and do not much. If these expand to 40, that means we would have lost 5 points on this triangle and we will exit. Same thing goes here. If these expand to 40, we lose 5 points on this triangle, we exit. We still end up with a good amount, more than 10 points for the day. So that being said, towards the end of the day, DK should really compensate for a lot of the delta and we continue to hold our position. Okay, the time is 2:51 and the plan is if we break down below 15,000, like if we head below 15,000, then we will move these puts away. We'll move half of them away by 50 points and then we'll see if we hold below 15,000, and if that's the case, we will move the rest of them away as well. Rather than moving the calls in closer, we will move away the puts. So we will reduce our reward and our risk as well. So this is what we're currently sitting on. Okay, so we're seeing this dip below 15,000, and yeah. So what we've done is we have exited these puts. We have exited the 14,700 puts, and we have moved them out to 14,600 because we don't want to take that much put side risk. At the same time, we don't want to roll down our calls, so we have just moved away with the puts, and this triangle now has 46 points in it, and we have another half an hour to go for market to close. Okay, the time is 3:02, and we're seeing a down move and potentially heading back to the day's low with a lot of aggression. This down move has come in, and meanwhile, good thing that we moved away our puts. They're not really expanding much, and the calls are not decaying either with the down move. The calls have been pretty much stagnated at this price point. We have orders set up to exit our entire position, which is what we will be doing if we see that we break the day's low. Because at this point, there's nothing more for us to do, given that there won't be any time. So, very interesting day. We have gone all over the place. No clear direction. Like anyone who went short here had to. They probably got stopped out. And yeah, we'll keep you posted in case we see that we're heading to the day's low and we're getting out of control. We will get out of the position altogether. Okay, the time is 3:20, and unfortunately, when we saw this big fall, we didn't want to hold on below this low being broken, and we got stopped out on the puts. Of course, had we held on to those puts, it would have worked out really well, but we did not want to risk it. The market is random these days, and 100, 150, 200 points being shaved off in the last half an hour would not be surprising to anyone. So that being said, we got stopped out. We still managed to capture a little more than about 6 points, a little more than 6.5 points for the day, which is fine. We were doing much better, but retrospect is useless. That being said, we're carrying an iron condor home, and we're going to keep this overnight. The hedging is very tight. It's only about 100 points. So we are carrying a 14,500 and 15,300 iron condor overnight. The plan will be to essentially convert these strikes into MIS tomorrow or move closer depending on where we open. And so yeah, that's the summary for the day. Very interesting day. We got a little caught off guard. I mean, this is what our fear was to begin with, and exactly that happened. And that being said, we still didn't end up booking a loss for the day, so that is a good enough outcome. And I'll catch you at the next one. So have a great evening. Thank you for watching.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.